Welcome back to the Rogue Trader podcast with me, Nick Leeson. Today I'm joined again by Jason Sen. I'm going to do some market analysis, or rather Jason is going to do that. I'm going to sit and listen attentively like you all. It's been a difficult week in the markets. We've been seeing news of conflict again in the Middle East between Israel and Iran, missiles going back and forth. I think, and we'll talk about this a little bit maybe at the end of the session, but a rather unusual end to the conflict as well. I was asked a question this morning about whether I thought that Donald Trump and Elon Musk were manipulating the markets. I think that'd be a very dangerous connotation with a full-blown war in the Middle East, but I get how it can seem like that. But it just brought me back to, I suppose, you and I have had similar sort of length of careers in the markets. I had a brief hiatus in Singapore for a while back in the mid to late 90s, but been through a number of these conflicts, a number of wars, unfortunately a number of terrorist attacks as well over the years. So I remember, I think I was 16 or so, and I was actually at school in America at the time on one of these exchange programs in Roanoke, Virginia, and that was when the tanks started piling into Kuwait, and things started to happen there. Then obviously we've been through a war with Iraq. We've had this Ukraine conflict with Russia just recently as well. And I think one of the things that's quite marked for me is how the markets have reacted differently now to how they did a number of years ago. And, we throw in a number of terrorist attacks during that period as well. And you get very, very sharp reactions to the market before you see any signs of recovery. But the recovery is coming quicker all of the time. And I think this conflict that we've seen between Israel and Iran is one of those. I'm used to the markets getting spooked, there being that fear and panic coming into the market straight away, and the market sells off for a number of days. But now, over the course of the weekend, we've seen a sell-off and a market recovering very, very quickly. I just wondered if you had any thoughts on that, Jason, before we start looking at some of the markets we want to analyze.
Yeah, it's actually a really good point. And even the whole tariff, I'm going to call it a debacle because it was really, but the stock markets recovered really quickly from that before all the agreements were in place. So I don't know, is that because we've just been so programmed to buy the dip, or do investors just push that news aside these days and just see all this as, it's always a buying opportunity?
Well, I think there's always more transparency. I think news is getting to us quicker. I think people are comfortable is not a word that I want to use, because comfortable isn't something we should get with it, because it's not a particularly great story by any stretch of the imagination. But I think news has flowed so much quicker than we've seen ever in the past, and you're getting more information more readily available to you very, very quickly. I know some of your friends, work in the media and particularly in that news side of it. But if you go back 30 years or 40 years when we're starting out in the markets, I remember silly things about people trying to get their office closer to the exchange so that the data feed worked quicker. Whereas now you can be anywhere in the world and receiving that information far, far, far quicker than we ever could have back 40 years ago. And just maybe if you've got a couple of stories about that positioning where people, were trying to be closer to the exchange so that they got the data feed quicker.
Oh, I remember it. I remember speaking to people at investment banks, and that was what they were doing at the turn of this century. And I was like, wow, really? Is that what it's come to now? But on the floor in the 90s, you probably had the same thing in Singapore. We'd have a Reuters ticker, but we didn't. We obviously didn't have great news feeds as they would have done in the offices. I mean, everyone had a Bloomberg and whatever. Yeah. And I actually remember that on the exchange floor, you talked about the invasion of Iraq. It was such a big event that they did something with the screens that we could actually watch the bombing on the news on the screens. And that, for us, that was amazing that we could actually watch a live video on the pricing screens. That was revolutionary at the time. So a big cheer would go up when a bomb was dropped around the trading floor.
Yeah, I remember when I was in Indonesia, which was the same story, which was Iraq, and very Muslim country. It was still quite, it was a difficult place to get around and a little bit dangerous. And we were sat in the office, and everything was starting out in Iraq, and we were just above where our office was sited. We were just above the United Nations offices as well. So everybody was coming out and, campaigning and protesting outside their offices. And we had like a little office, probably 4 or 5 of us, no more than that, right towards the top of the building. And we had to, somehow secrete our way out of the building late in the evening just to keep away from it. And it happened for a number of days after that. And obviously the markets were in turmoil, but, obviously we've seen this thing with, Israel and Iran over the last few days, and it's resolved itself very, very quickly. Some have said that it was very coordinated in terms of the way that it was resolved, and I think it was cleverly resolved, to be honest with you, when you look at it from very holistically. But it's led to that question about whether there is any manipulation in the markets in that regard, and we'll touch on that as we come to the end of it. But just one of the things that kind of interests me, and again, is on the theme that we've spoken about over the last number of weeks and months, Jason. When you're doing your technical analysis and you're looking at that, and there's a conflict going on, does it just throw everything out the window? Are the moves that severe that the analysis, the technical side of it, isn't as proficient as it should be? You're going through levels far quicker than you would. That's the summation of it.
Yeah, I would say that's a good point. And actually, before the attack, before Israel attacked Iran, I was selling the dollar. We're in a bear trend. I'm a trend follower, basic strategy. And of course, the dollar popped higher as a safe haven, I guess, when that over that period. So that screwed me up for sure. I'm just starting to get back into dollar shorts now, because I think we might just be starting a new leg lower in the dollar now that whole thing has subsided. But actually, that also makes me think the usual safe havens are not always there now either. I mean, gold initially popped up, but sold off very quickly on that whole attack situation, and even oil didn't sustain the gains as well as I thought it would do.
No, and I very foolishly got involved with Bitcoin on Sunday, which I know is a stupid thing to do anyway. But it went from 100. I think over the weekend, Bitcoin went from about 104, 105,000 down to 90, just below 98. So I had like a $6,000 move just over the weekend, with that uncertainty, that fear of what was going to go on ahead of the resolution. There was all this talk about Trump taking 2 weeks to decide what he was going to do, and 2 weeks later, it's pretty much resolved. So you spoke about the dollar. The dollar is weak at the moment. We're seeing sterling and the euro much stronger this morning. I've traded it a couple of times. Currencies aren't really my thing, right? I remember years ago, somebody in a treasury department telling me somewhere that, there's a lot of big players in the treasury markets, in the FX markets, and you're probably best to leave them alone. But for you, on a technical perspective, they can be very, very good, especially when you see something happening in the market and a potential breakout. So what are you seeing there with the euro dollar at the moment?
Let's have a look. Okay, so actually that's cable, which you can see is in a nice bull trend, the pound versus the dollar, and I'm expecting that to continue. You can see there was a consolidation here. Let me see now. That was end of May to, it was about a month long, actually. Yeah, 23rd of May to 23rd of June, almost exactly. And now it's taking off. You can see these 4 nice green candles just to the right of the daily chart. So looks like that's going to keep going. In my opinion. I'll show you the euro.
Okay.
Takes a little bit of time to load. There we go. Not too dissimilar, really. You can see on the right, the chart on the right, anyway, which is the daily chart. Nice move. Typical sort of bull flag here at the beginning of June, which is now completed, and the market's going up again. 4 green candles. Actually, if you don't mind, I'm just going to quickly flick on the dollar index chart as well, and you can see we've been in a nice bear trend in the dollar index for the whole of 2025 so far. Just breaking the low of April and June, which was roughly around the same area. The June low was a little bit lower. That was the little recovery we had on the Iran attacks. The 200-day moving average looking like a really good resistance line for the dollar index. We hit that, turned around, and we've come off quite significantly. So yeah, I think that the dollar is in the mood to go down a little bit further.
Okay, so you're seeing continuation there, and some of that, not from a technical perspective, is going to be, Jerome Powell is probably the most cautious Fed secretary that we've ever had, or Fed chairman that we've ever had. Let's give him, the appropriate title. But always ultra cautious about everything that's going on, and he's still talking about tariffs and how that's going to come through in the data. And I see some analysts are saying, potentially we might not see that for a couple of more months. So maybe there's not an interest rate cut anytime soon that's going to affect this market, and maybe that continuation continues to go. Whilst we've got you on, Jason, can we just have a quick look at Bitcoin before we finish up here and just see what's going on with that?
I can indeed. So again, on the right, we'll focus on the daily chart. A good run up. We're trapped in this sideways channel. It might be a flag. We won't know, but the upper trend line is around 109,000. The lower trend line, where there is good support, is around 97,650. So that's your range. You can see that the 23.6% fib around 103,000 is also having some effect on the price action. Now it's just a question of, where do we break? You would assume that Bitcoin would break to the upside, get through 109, 110,000, and then that would be the start of the next leg higher. Obviously, the challenge then would be to break the all-time high, which, according to my chart, is just below 100 and what's that? 112,000.
Yeah,
just below 112,000, or just above 111,000. If those would be the levels. If we can start pushing up through 109 and hold, that's going to be a good sign for Bitcoin. I think that's probably what's going to happen, but I couldn't tell you when what the timing would be.
Yeah, I think it's been just over the last couple of days, probably because I had that mess up at the weekend more than anything else. I have kept an eye on Bitcoin, so it's struggling around that 108 level. But yeah, look, it does look like it's going to gain the appetite at some point to push ahead and go through those, go back up towards those record levels. But the indices are there as well, which is absurd, as you said at the beginning. After everything that we've gone through, the drama of the trade tariffs, the fact that, and the fact with most of those is that they're on pause at the moment. None of them have been resolved, or there's a few of them that a lot of the major ones still need to be resolved. And the markets are back at record levels. The S&P's touching it. The Nasdaq is there. You've got Nvidia was up 4% yesterday, I think, and is at a new record high. So, for somebody looking in, it all looks very rosy and very healthy, but it changes on a knife edge, as we know. And, I'm not sure that we've seen the last of that conflict yet in between Israel and Iran. So, but the turnaround has been significant.
Really has. You just can't bet against the stock markets. Look at that V-shaped recovery on the daily chart. Yeah. Really strong recovery, and now we've beaten the previous all-time high from February. This is the Nasdaq futures. Pushing higher and higher. Look, we're as we chat, we're sitting almost at the all-time high in the Nasdaq.
Yeah, and look, Trump has his own way of doing things. I think in years to come, people will maybe look back on what happened between Israel and Iran and decide that it is the greatest piece of diplomacy ever seen. Whereas people at the moment are suggesting that maybe there was some potential for manipulation in the markets because, you know, I saw the interviews. There's people in Doha saying that there's missiles being fired all over the place, but it was contrived, it was manipulated, but everybody's in a panic and everybody's reacted in a certain way, and the stock market's up 500 points. Just absurd in terms of it's a, you know, it's a sentence you don't expect to put together, really. You know, Iran firing missiles on US bases in Qatar and the market's up 500 points. It's just, it's true. Absurd. Anyway, look, Jason, go on.
No, yeah, you're right. It's hard to get your head around everything that's happened in 2025 so far.
Yeah. No, look, Trump is definitely interesting. There's no doubt about that. Thank you very much for joining us again today. Hopefully people have enjoyed it. They like, they subscribe, and feel free to ask questions. And Jason and I will always do our best to answer those questions as well as we can. Thank you very much.